Hello, my dear students. Today we are going to start with bank reconciliation statement. It is a revision class, so we will go through the theory part and steps in short, and then we can solve the examination questions. So, to understand bank reconciliation statement, we first have to understand what is bank passbook or bank statement. So, bank passbook or bank statement is the ledger account of the customer who has maintained the bank account with the bank as per the books of a bank. So bank passbook is nothing but it is a ledger account of the customer maintained by the banker in his books of accounts. So what is the format of your passbook? Passbook will have the columns. First column will be date column, then particulars, then credit, debit, and then balance. So what is the credit means here? Credit and debit. So debit side means it includes withdrawal of cash, payment by check, then bank interest, commission, service charges charged by the bank, payment by the bank for standing instructions. What do you mean by standing instructions? These are the instructions given by the customer. Say, for example, I have given a standing instruction to my bank for payment of a rent every month. So, I have told my bank to make the payment of the rent on behalf of me. That is the standing instruction given by the customer to the bank. So, according to that standing instruction, payment will be made by the bank every month. So, these debit side, if you see, because of these transactions, my bank balance will decrease every time because withdrawal of cash, payment by check, bank interest, commission, and service charges, and payment by bank. By doing this, my balance as per passbook will reduce. So, these all transactions will come in my cash book also. Cash book, which side these entries will come? These entries will be coming on the payment side of my cash book. Payment side means it is which side? Credit side of the cash book. So here the important point to be observed is debit side of your passbook is nothing but credit side of your cash book. That is the most important thing which we have to remember. Debited in passbook is nothing but credited in the cash book, and your bank balance as per passbook will decrease whenever there is a debit in the passbook. Similarly, credit side what all entries will come? Cash or check deposited into bank, income or receipts like interest, dividend received, then direct collection by the bank. So all these are my receipts. Because of these transactions, my bank balance will increase. So in my cash book, it will come on the receipt side of the cash book. So receipt side is nothing but debit side, left hand side. So debit side of cash book is nothing but credit side of passbook. That is the opposite relation which we have in the cash book and passbook. Why there is a opposite relation between cash book and passbook? If it is debited in cash book, that means credited in passbook. If it is credited in cash book, that means debited in passbook. Why it is like that? Because when we deposit the amount in the bank, it becomes a asset for the businessman, whereas for the banker it is a liability. Banker has to return that amount to the businessman whenever it is demanded by the business entity. So for banker it is a liability, for businessman it is a asset. So if it is a debit for the businessman, it is a credit for the banker. So that is why debit and credit has a opposite relation when it comes to cash book and passbook. This is one of the important point which you have to remember here. Cash at bank. Cash at bank is nothing but it is an asset for the business. So if it is as per cash book, it will always show which balance? Debit balance, because it is cash at bank. Cash at bank is an asset. Asset will always show which balance? Debit balance. Whereas as per passbook, it will show which balance? Credit balance, because banker has to give back that much amount of the money back to the business entity. That is why cash at bank debit balance as per cash book is nothing but credit balance as per passbook. It is always a positive amount. Whereas bank overdraft, we already know that it is a liability. Liability means it will show which balance? Credit balance. So bank overdraft as per cash book means it is showing which balance? Credit balance. Whereas as per passbook, this is the amount receivable from the customer by the bank. So for banker it is a asset. It will show which balance? Debit balance. It is always a negative amount when it comes to bank reconciliation statement. Let us see the format of your cash book also. Cash book means we are concentrating only on the bank column here. We already seen that simple cash book, double column cash book and triple column cash book. In double column and triple column cash book, there is a cash and bank column. So we are concentrating only on the bank column of the cash book. Whenever I use the word cash book, I am referring to the bank column of the cash book. Next, cash book will have two sides. One is debit side and another one is credit side, or I can say LHS and RHS. Left hand side, what entries we will pass? We will pass the receipts of cash, whatever deposited in the bank, direct deposit by the customers, interest credited by the bank, all these are receipts. So my bank balance will increase as per cash book, and payments will be written on the right hand side, that is credit side. My bank balance will decrease when I make the payment. So you can see the inverse relation between debit and credit. Here credit means increase in the balance, here debit means increase in the balance, right? So what is this bank reconciliation statement now? Bank reconciliation statement is nothing but at periodical intervals, business entity compares the balance as per cash book and balance as per passbook. It has to be same. But if there is a cash book balance is not equal to the passbook balance, then we have to analyze the reasons for such difference. These reasons will be presented in a form of a statement. That statement is known as what? Bank reconciliation statement. It is very simple. So what is bank reconciliation statement? It is a periodical statement prepared by the business entity where cash book balance is not equal to passbook balance. To analyze the reasons for this difference, we prepare a statement. That statement is called as what? Bank reconciliation statement. This point can be asked for true or false question also. So you have to remember the purpose of preparation of BRS. Next, what are the reasons for difference between cash book and passbook balance? Here we have seen that cash book is not equal to passbook. So what are the reasons for the cash book balance and passbook balance to be different? There are broadly two reasons. One is timing difference. Second one is errors. So under timing difference, what all things will come? Check issued but not presented for payment. That means as a business entity, I have issued checks to my suppliers or expenses, whatever it is. For presenting that check, the supplier has 3 months time period. So he can present this check anytime between the 3 months and he can encash that amount. But whenever I issue the check, we will pass the journal entry immediately in our bank column of the cash book, that is on the payment side. But that check will be realized at a later point. So there is a timing difference. Because of this, your cash book balance and passbook balance will not tally. Second timing difference example is check deposited but not yet cleared. What it means? Our customers has given me a check and I have deposited that check in the bank. For clearance of that check in the bank will take around 3 to 5 working days for clearance of this check. But when in our books of accounts we will pass the immediate journal entry saying that check deposited into bank, we immediately increase the balance in our cash book, but it will be increasing in our passbook within 3 to 5 working days. So there is again a timing difference. So under timing difference there are only two reasons. First one is check issued but not yet presented for payment. Second one is check deposited but not yet cleared. Then second reason for your bank reconciliation statement is errors. Errors can be done in the cash book or errors may be there in the passbook. So if there are any errors in the cash book, so what are the errors which are present in the cash book? Say for example, entry in the passbook. Passbook there is already journal entry passed, but no entry in the cash book. Passbook is maintained by the banker, whereas cash book is maintained by the businessman. So already banker has passed the journal entry, but businessman has not passed the journal entry. So this is the error of omission. Second one, if there can be any error of commission, like wrong amount, wrong side, etc. In the passbook is maintained by the banker. There can be error of omission or there can be error of commission. It is error done by the banker. Because of that also my cash book balance and passbook balance will not tally. So these are the broad two category of reasons which are reasons for the bank reconciliation statement. So how to prepare the BRS? There are two methods for preparation of BRS. In our PUC we have seen only one method, but here we have to learn both the methods. First one is without adjusted cash book. Second method is with adjusted cash book. So what is this without adjusted cash book method? Here only BRS is prepared taking either the balance as per cash book or balance as per passbook as the base amount. If I take the cash book, I will arrive at the passbook balance. If I take the passbook balance, we will arrive at the cash book balance. So one amount we will consider it as a base amount and we will do the adjustments. Here one thing we have to remember, only the base amount can be altered. So base amount whatever we take, either I can increase it or I can decrease it. So that point we have to remember. Next one, with the adjusted cash book. Here we have to prepare two things. First one is prepare adjusted cash book. That is all the errors done in the cash book are rectified first and revised cash book balance is taken as a base for bank reconciliation statement. So first we have to prepare the adjusted cash book where all the errors done in the cash book. We have already seen errors done in the cash book. What are that? Entry in the passbook, no entry in the cash book, and errors of commission, clerical errors. These are to be rectified first. Already we have seen how to do the rectification of errors. By doing that we have to do the adjusted cash book and we have to calculate the revised cash book balance, and that will be taken as a base for preparing the bank reconciliation statement. In bank reconciliation statement only two things will come, that is timing differences, that is two entries, and errors done in the passbook by the banker. If I adjust these two errors in the BRS, my BRS was over. So this is the small theory part of your BRS. In our next class, we will see the examination questions, how to solve them, and you will come to know this topic easily. So this BRS question can be asked for 10 marks in each question paper. So next class we will see the question paper sums. Thank you.